Good morning, it's Tricia with Easy Emini Trade, and I wanted to go over the setups from Wednesday morning on the ES and the NQ. I've been getting some questions, and so I just thought that I would do a video and give you an idea of where the setups were so you can compare to your screen, to your charts. So if you ever have any questions, you can always send me an email, or if you want more information on the setups, just go to www.easyemintrade.com. So we'll start off on the NQ. This is a 1-point range chart, and so I've got my bars coloring based on the indicator being above 0 or below 0. So first thing in the morning, I don't like to do anything until price figures out which direction it wants to go. The yellow line is the close of the previous day. The green is the high of the previous day. So right here we wind up with a brand new setup, the indicator crossing above 0. I'm not interested in that for a couple reasons, and that's because it's right under the close of the previous day, as well as being right in that 2200 area, and oftentimes those round numbers can be a real pain to get through, so I'd prefer to get through it and then look to get an entry. So right here we get a pullback entry, pulls back to the moving average, and we enter in and we look for the high of the previous day to be the target area, and that's at 950. Here at 1031 there was a short setting up, and this stair-steppy looking line is the moving average off of my broader view. It's just easier to see here. There's a couple other things that I wanted to talk to you about as well. So it's on here, and Scott from the room helped me get that on there, so I'm getting used to having it there. It's actually pretty interesting. But anyway, short here at 1031. If you missed that one, then you had one here at 1044. And let me just scroll out, and here you get one right here at like 1052. And of course, if you're in from here, depending on how you managed it, you could be, still in this down here. You don't have to get out and re-enter. So it really just depends on how you manage it. 1044, you get an entry here. Here you actually get another one right here at 1052. And again, if you're already in, then it's irrelevant. But if you're in and out, depending on how you manage. But if you see this setup right here, it's almost at 1053. You're right back down to that 2200 and that close from the previous day. So, up to you if you're going to take something around that. It works out just fine, but I would prefer to either have room to that area to do it, and you may have decided that you do have enough room. It's totally up to you, and then oftentimes you're rewarded for taking it and it's able to get right through, but there are plenty of times where it doesn't. So again, that's going to be a personal choice. So if you wait to get through that, then you're looking at a pullback right here. It's moving, and then it pulls back to the moving average here, 1058, entry there. 1117, short right here. Let me just get my pointer again. Short right here at 1117. And the floor trader pivot point, that's the only pivot point that I use from the floor trader pivots on the NQ. But that would be your target area. And you've got more than 2 points worth of room there. So if you're using 2 points as your target, then that's fine, and you're able to get through it. Once you get your first target, what I like to do if you're exiting in stages is then move your stop to a tick better than your entry, and then manage it from there. So you can just have targets set at 2 points, 4 points, or 3 points, 5 points, whatever you want, whatever works for you. I don't trade after 11:30, but I'll point out a couple of them that set up. You had this at 11:34. This would have been a brand new entry, indicator crossing below 0. Everything's good there. If you missed that, pull back here. Realistically, again, if you're in from even back here, you could ride this all the way down and not have to re-enter. So it really just comes down to how you're managing it. If you missed it at 11:34, a pullback at 11:41, an entry at 11:55. So those are the entries for the morning. There are a couple more during the break, but I want to get to the ES as well. And I'm not showing you the broader view, so I can just show you the whole screen. But as I was saying, this moving average right here that looks kind of like it's stair-stepping, that's the moving average off the broader view. So I know that I'm under it, and I know that it's coloring for sloping lower because you can see this pink color here. So, you know, everything is good to go there. I'm just trying to share as much of my screen as I possibly can with you guys. One thing I did want to show you that we've been doing in the room is I've been calling it a counter move trade, and it's aggressive because you're going to be going against the move that that just happened. But here's a good example here. I'll just show this real quick. So you know that you just had this large move lower, and this is the moving average from my broader view, as I mentioned. And we know that price, no matter what moving averages you're using, when a lot of distance gets between price and that moving average, price is going to find its way back there at some point, or stall until the moving average finds its way back to price. So after this move here, you can see here where price is, and you can see where the 9 weighted is up here from the broader view. So you've got a lot of space there. So you get your indicator crossing above 0, and then you get the slope of our moving average here starting to change color for sloping higher. So you can go ahead and buy that with the expectation of price finding its way up to that 9 weighted from the broader view. It's, like I said, very aggressive, but the key is that you want to have a lot of space between price and that 9 weighted from the broader view. Otherwise, you don't do it. Obviously, you wouldn't do it here or here. There's no space. So that's the key, making sure you have a lot of distance. And then also, I would recommend waiting, like when you get the indicator crossing above 0 in this case. Let's say that this was still coloring pink for sloping lower. I would pass on it. So as long as it's coloring green and I've got a lot of space there, I'd be willing to try it. So it's been working out really well. I don't have any statistics on it. We've been doing it for a few weeks in the room. You can do it, and this is the 1.5 point range chart, but you can do it off the 1, the half. I like the half actually if it's not moving too fast, but the 1 works, the 1.5 works, whatever you want to use works as long as you've got the space. Okay, so that is the key. And here's the 1 back up. I didn't want to confuse you. I accidentally opened up the 1.5 when I remembered I wanted to show you that setup. But here you can see it move lower, and then a retrace back to that 9 weighted from the broader view. So again, the key is distance. If you don't have enough distance, then just stay away. And it's going to work like after the initial move. So like when it moves, you get a big move, let's say lower, you're going to look to take it on that first retracement. Like you don't want to do it if it's going sideways and then sets up for that counter move entry that I'm talking about. It either happens right after the move or pass on it, because you don't want to get in the habit of taking counter moves every single time they occur. You just want to do it when you have a high probability of it working out, and it's when it first starts to move in the opposite direction after the initial move. So here's a move. You can see you've got the space. Everything's in line there to buy it, expecting to get back up to that 9 weighted. Here's another move. Not a lot of space there, so I'd pass on that one. And determining if there's a lot of space is going to be subjective. Obviously, that's going to be up to you. But I would suggest checking it out on a half-point range chart or the like a 3/4 even, and you'll see that you have a lot more space between price and that moving average than obviously you will on the 1 point. Okay, so let me just pause my screen for a second and flip over to the ES now. Okay, on the ES, a half-point range chart is working better than the 1 point. Last week, of course, the 1 point was working just fine because we were getting much larger moves. But once again, off the open, I wouldn't be doing anything until it decided what it wanted to do. But that's just me, so you decide what's right for you. I do have all the floor trader pivots with midpoints on this. I don't take the time to look for support and resistance on that. Here's the high of the previous day right here, the green line. So right here you get an entry at 944. You've got the high right there above you. So that would be your first area of reference, and if you get through that, then the next would be that R1 line above your head. You actually get a pullback entry here at 950, but if you're in here from 944, realistically you're still in here at this 950. You would have been able to ride that all the way up. Here you get this buy setting up, but you're under the 9 weighted from the broader view, so that would be a pass for me. And you're above the 9 here, and it's sloping green from the broader view, so you're not looking for shorts. Same here. Here, if you notice this setting up here, the indicator crossing above 0, but the slope on that moving average on this entry chart is still sloping pink. Not interested in a buy. Here you're under it. Here you get a short setting up right there at 1045. You can see it. Everything's in line. You're under the 9 weighted from the broader view. It's sloping lower. But there's really not enough space here to the high from the previous day. So I would not take that. If you did do that, you have to be aware of that support area below you and that you might not be able to get your larger target that you like to shoot for. So realistically, that probably, you would have been lucky to get like 3/4 of a point or half a point out of that. Here, same situation. You still have that area of support below you. So I would be looking to get through that and then look for an entry. So you get through it, then you get your pullback here to the moving average, and you get in at 1057 as the time. You're not looking for a buy because you're against the 9 period weighted. However, as we were just talking about that counter move setup, slope on our moving average is green for higher. We've got distance up to that 9 weighted from the broader view. If it fits your plan, you take it. And again, they are aggressive. And then I'll give you a couple after 11:30 as well. Here's a pullback at 11:24, pulls back to our moving average right here. You can see it. And then you'd use the floor trader pivot midpoint as your target. And you realistically would have been able to trail down to this area here. Realistically, if you got in here and then you move your stop to a tick better than your entry, you would have been stopped out here. Another entry here at 11:34. Indicator cross below 0. You're below your 9 weighted on the broader view. It's sloping lower. Your moving average here on your entry chart, sloping lower. And I just go by the color. What's the color that it's coloring? Some people prefer a specific degree. But 1134, 1141 as a pullback entry. So I hope that helps. And before doing those counter move entries that I was talking about, I would suggest practicing them and sim trading them before you decide if you're going to add it to your trading plan. So if you have any questions, feel free to shoot me an email, and I hope you have a great day.